Sometimes you just feel tired, feel weak. And when you feel weak, you feel like you want to just give up. But you gotta search within you. Try to find that inner strength and just pull it out of you. And get that motivation to not give up and not be a quitter. No matter how bad you want to just fall flat on your face. Till I collapse, I'm spilling.
This is the Doc with SilverDoctors.com. Today we're pleased to welcome our good friend Harvey Organ of the famous Harvey Organ's Daily Gold and Silver Report.
And how are you today, John?
Doing great here, Harvey. Thanks for coming on the show. I wanted to start out with talking about, well, the news here lately. The European debt crisis seems to be kind of dominating the news currently. And Friday, we had a 19 billion euro bailout for Spain's Bankia announced. But in my opinion, JP Morgan's derivatives hedging crisis is a bigger risk to the system presently. What are your thoughts?
For sure. Jim Willey certainly brought it out, and we've been following this for quite a while. Rob Kirby in 2009 wrote that great paper, The Elephant in the Room. And that's where he describes the huge amount of derivative of interest rate swaps that JP Morgan has underwritten, and it's probably in excess of $50 trillion of the 70 trillion derivatives that they hold. And these interest rate swaps is really a bet where they generally go long on long-term rates in the future and short-term treasury bills. And that forces the purchase of bonds, which in turn causes long-term rates to fall. And that's basically why long-term rates are really low in the United States, but when you go to Europe, they're higher. It's because of the manipulation by JP Morgan. And what Willie has shown, and I missed it until his commentary, was that JP Morgan is unwinding some of these interest rate swaps. And if they're unwinding these things together with the huge losses of the IG9, losses that they had from the European underwriting of those credit default swaps, together this could bring down the whole financial system of the world. And if it's $100 billion, then that blows up everybody. And this is scary, which will probably explain why JP Morgan was forced to come on Thursday night rather than let the world know on Friday. The regulators certainly forced them to make their statement on Thursday. Probably will explain why the FBI are involved. They probably told them that this is coming. So the FBI has now doing a criminal probe. Also explain why the CFTC has their enforcement arm, which is supposed to be more powerful than their other side, but with the silver they do absolutely nothing. But let's leave that alone. But the enforcement arm of the CFTC is coming in on that derivative side. And then, of course, the SEC is also doing a probe on these trades the moment it was announced. So if you look at it and say, well, JP Morgan earned $20 billion, and then all of a sudden they had a loss of $2 billion. I mean, it's not going to shouldn't cause that much of a scare. But probably these regulators know the truth. They probably told them, look, we got a major problem here. And that's why all these other regulatory bodies have started coming in. And they're now scratching their head what to do. Because if the JP Morgan's involved, it really is the Fed itself. And if the Fed's blowing up, I guess that'll just about be the explosion throughout the world.
And just to clarify for our listeners, we're talking more than just the IG9 tranche unwind. We're talking their interest rate swap unwinding.
That is correct. And that's huge. And that will probably really explain why all of a sudden all these three bodies came all at once. I mean, JP Morgan's been fooling around for all these years and all these things, and now they're worried about the customer. You know, the probe didn't start with the MF Global. I didn't see the FBI coming in when JP Morgan stole customer money there, but they came in now. Okay, and it's immediate. So there's some strong merit here that their losses are huge, not from the losses that they had in Europe, and that's 8 billion is still huge. But I think the scare is the huge losses that are unwinding on their credit default swaps. Sorry, on their interest rate swaps.
Right, and I think one sign that kind of demonstrates how potentially imminent this is Thursday's report by the Wall Street Journal that they're pushing, the CFTC is pushing for a taxpayer backstopping of the clearinghouses and derivative exchanges.
I was irked no end when I saw that. And you don't think that's unusual? It came out Friday? You don't think that's unusual? All of a sudden, wait a minute, obviously there's going to be a failure to deliver. There's no question. I'm just waiting for June. June in gold has got to be a riot, and so will July's silver. For that delivery month. I'm just waiting. I'd be willing to bet we're going to probably see 20 million ounces of silver stand, and I don't know where they're going to get that from. And then in gold, we'll probably see maybe 30 tons, 35 tons, 40 tons. It'll be a lot.
Yeah, that announcement by the Wall Street Journal, but the CFTC pushing for a backstopping of the derivative exchanges kind of reminds me of the unlimited Fannie and Freddie bailout or backing on Christmas Eve a couple years back.
Yeah, but what it's saying is the customer now has to pay for their mistakes, which is what the taxpayer. That's what it's saying. Okay, and also you saw the new thing on Friday. Mark Grant came out with one where they now want to change the rules, the regulators on sovereign defaults, where the regulators decide who gets what. And that was on Friday. Mark Grant wrote that one out. So you're seeing all things change so that the bankers get their money but leave the taxpayer zero. And you're seeing all this. You're seeing the CFTC, and you're seeing they don't care. They couldn't give a damn about the little guy. Right. And that's heartbreaking. And actually, Ted Butler came out, and he just gave up on the CFTC. I mean, this guy, Ted's been writing constantly that he loves, the two guys, Gensler and Bart Chilton, that they're really going to make this thing go. And he just gave up on Friday. He just said that there's no way the enforcement are going to do anything. Right. I a lot of people don't know this, but I actually I talked to the enforcement arm. I kind of said to them I have concerns, so I called them. They called me back, and I had an hour and a half discussion with them. And I just want to tell you, it's like they were like in kindergarten. I mean, these were lawyers. They had no knowledge whatsoever what was going on. And I said, this is the enforcement arm. So I told this to Bart Chilton. I said, Bart, these guys know nothing. I mean, I don't know what they're investigating, but they certainly don't know anything about JP Morgan or anything what's going on. And I had my doubts that anything would come out. And sure enough, it's now almost 4 years, and nothing will come out.
Right. Getting back to JP Morgan a little bit, and where you're just talking about the big delivery months coming up here, I wanted to ask you, Harvey, what do you make of a couple weeks ago, JP Morgan adjusting over 6 million ounces from the customer to the dealer vaults, and I think it was under a week in early May.
Yeah. I don't trust anything that goes on with that data, to tell you the truth. It's all over the place. I mean, you got to look at it. You got to see, well, there's 141 million ounces of silver sitting in both registered and eligible, and they can't find any ounces to deliver upon. And then when I take a look at the subtraction and to settle upon these, it's not there. So I'm questioning, what are they settling with? I can't find it. I go and write to Bart, please tell me. I want to know how they're settling. Where is it coming from? And they can't answer me. So I have a strange feeling that it's papered. You're seeing a paper, those guys that keeping their silver at a COMEX vault will be papered. There's no real physical silver on their name. And then you're seeing these adjustments all over the place to counter this. And it's just wild, that's what I see. It's the smart guys who are really taking their silver out in London, and you're seeing huge imports of silver into China. And we're certainly seeing that. And I think that's where the game is. So to tell you the truth, I wouldn't trust any data coming from the COMEX if my life depended on it. Okay, and that's, I'm telling you. It just doesn't make sense.
Right.
I mean, how can you have 141 million both eligible and registered, and they take a whole month to deliver upon it, and then you go to how much was removed, and you're seeing there's very little to settle. So it makes no sense. The data is just, unless there's paper settlements, and I believe there are, that would probably be the only answer I could see.
I think you're probably right, and that's one of the things we always stress is if you don't hold the physical, you don't own it.
Yeah, that's correct.
And speaking of physical, I don't know if you saw, APMEX yesterday launched a physical gold redeemable trust on Friday.
Oh, I didn't see that. Okay.
I know we've had a few personal discussions in the past, Harvey, about all the shenanigans going on in the SLV and the GLD.
Okay.
Speaking about paper, can you give our listeners a little insight into whether you believe the GLD or the SLV contain the physical metal they claim?
Oh, I don't think they have any. I can give you the story.
Yeah, why don't you tell our listeners the story?
In 2006, Reg Howe is a very close friend of mine, and he would come up from Boston, and we always started to discuss the GLD, and he would basically say he was speaking with Franco Nevada's Pierre Lassonde, and says, I've seen it, I've seen the gold, and they were kind of, they thought this was real. And I said, Reg, it's not. I can't see it. And Reg then tells me, Harvey, I can't balance on when the BIS data comes in June. It's coming next month, by the way. When the BIS data comes, I'm always out, and I can't quite come up to terms what's going on. Okay. Then he meets Catherine Fitz, okay, who says to Reg, and Reg tells his dilemma when he does his BIS data. And then Catherine says, the GLD people can receive through a gold through a swap and swap out cash as long as it is re-swapped at a future date. And he says, no way. I thought the indenture says they're not allowed. He says, check again. They can't. They themselves cannot, but they can receive. And sure enough, it was written there. Reg goes back and does all his data by removing the double counting of the GLD and comes out exactly correct. So he strongly believes that that's how the GLD got their gold. They got it through a swap, through cash, okay, through the Bank of England. So, and that's how readily these guys get gold. It's easy. It takes Eric Sprott or Central Fund of Canada months to get their gold, and these guys get it in 24 hours. It's naturally because it moves from one cubby hole to the other at the Bank of England. So, and also the other guy who strongly believes is Jim Willie. So, because Willie also believes that's how they're getting it. So, and the silver is similar, okay, but similar started with the silver from Warren Buffett, but that dissipated.
So based on, sorry, but just to clarify for the listeners, based on Reg Howe's research and previous to the, I believe from when we talked earlier, previous to the GLD launching, his BIS data always was precise, correct?
Always. I've been following this, and that was the basic discussion as to how these guys leased. We started doing, or Reg doing it, and he started explaining to me since 1999. Okay, and then, so, everything was balanced, everything was fine. We knew what was forwards. Forwards are the short position of the banks. We knew how much they were short and what they were supplying. Everything was fine until the introduction of the GLD. And then it goes haywire. And he's always out. And he generally was out pretty close to the value of the amount of inventory at the GLD. Of course, they're short something, so there's some sort of little difference, but pretty close. And then he goes back after doing it and couldn't come up with figures properly. He then redoes it and takes out the GLD inventory, and it's exactly what the banks are short, and it covers what the OCC says and the BIS basically is what is the true loss to a bank. You see, because that's all the BIS does. The BIS is not worried about you or me or anybody. It's only worried about the risk to the bank. All its banks, the 10 major, all the banks that it covers. That's what it's worried about. So it looks at the total forwards and then discusses that is the risk. And now if you remove the inventory of the GLD, then everything is put in balance.
So
what they have in there.
So essentially what that data seems to indicate then is the GLD vaults hold physical gold metal, but it's not owned by the GLD.
No, it has to be re-swapped back to the Bank of England, but the Bank of England has basically swapped it to the GLD, and it's not even in the GLD. It's not even the Bank of England's gold. It's probably Arabs or anything like that. So it's really an obligation on the Bank of England to get that back. So this will also go along with the whole hypothecation story of MF Global. It's the same ounces of gold is going from one place to one place all the time, which is what I've been stating all along. And it's not just me, but Reg and a few other guys are basically saying the comics, the LBMA, the Bank of England, it's one inventory, and it serves three masters. And the fun begins when they all want it back.